Hi, this is Mark Woodward, your straight shooting advisor, and this is the KANA Private Wealth Group fourth quarter tactical brief. School's back in session and fall's in the air. Hopefully you guys were able to spend some quality time with your families this summer. Unemployment's at 3.5%, which is still good as it's a decrease from 3.7% listed in August. The Fed is targeting rates at 4.5 to 4.75 by early 2023. The effective federal funds rate as published by the New York Fed on October 12th is 3.08%, so that's about a 50% increase. And that will have the desired impact of dampening demand. The risk, of course, is that the Fed goes too far, too fast, and makes the recession that's coming worse. And mark my word, the Fed has already made a mistake that will cause a recession, reacting too slowly to inflation. The Chicago Fed put out a white paper recently that said that 2/3 of our current inflation is due to supply chain issues due somewhat to COVID. And 1/3 is due to consumer demand, driven primarily by all the stimulus money that was put out in the enhanced unemployment benefits. CPI is at levels not seen since the 80s. The September CPI rating was up 0.4%. And that put the year over year at 8.3, but it's still not significant enough for the Fed to stop raising rates, in my opinion. Now, with that backdrop, I've completed our quarterly screen, and since that has not identified any managers to replace, I've decided not to rebalance any of our models currently, as this will allow for more cash to build up and provide slightly less volatility to our portfolios. The exceptions being, of course, new accounts and new capital added to existing accounts. Those funds will be deployed tactically over time. Now, if you have any questions or concerns about the current market or want a review of your account specifically, please call me. And remember that at KANA Private Wealth Group, we help you put your family first.